There you have it, Nancy. We have the AI Transformer, Optimus Prime, and all the other ones. Everyone loves Bumblebee. I don't know if you ever watched the movies, but it's the data centers. It's the energy side of this. It's all the stuff that, by the way, you've been talking about, folks. Nancy Tengler, Tengler Investments. So, Laffer, Tengler, listen, you've been pounding the table on this fourth industrial revolution for a long time, but even you have got to be somewhat in awe about how fast it's coming at this point.
Oh, hi, Charles. Thanks for having me. And thanks for the work you do. I constantly am stopped by people that want to talk about you, not me. So they are a loyal following, and I appreciate your educating people. Yeah, so I wouldn't say I'm in awe because it is moving faster for sure. And that usually happens with technology. It's cumulative and it compounds quickly. But we saw some of this in the 90s, as we've talked about in the past, where the adoption rate really accelerates. And that's what we're hearing from companies in earnings calls. They're adopting AI quickly and they're utilizing it to improve productivity, even though we didn't see very good productivity numbers today. I think we will in the future.
Yeah, you know what it is, though? It's like we've seen this, but never like this, right? Never with this many players. I mean, think about this. Broadcom. They're going to report after the close. I'm calling this the Clark Kent of trillion-dollar companies. It's amazing. You know, only 5 stocks have outperformed it over the past 5 years. The shares have soared 5 times, in the last 6 times they've reported earnings. Up 7%, 21%, 8%, 21%, 20%. And so I want to give you props now, because this brings me to your 5 for 25 ideals. You unveiled that on this show. Thank you very much. You showed it to the public for the first time. Broadcom is one of the names on that list, right? So let's talk about it. Into the earnings after the close. If someone's not in it, is it too late?
I don't think it is too late with this particular stock. And this is a classic example of a really savvy management team that is making acquisitions on the software side to smooth out their business, turning those into accretive acquisitions. So now you've got free cash flow ramping. And then they unveiled the Tomahawk Switch series. And that is new. That's groundbreaking in terms of AI and scaling. They've got hyperscalers in their back pocket, and they've announced 2 new hyperscalers. So we'll probably hear more about that. And they return a good chunk of their earnings to investors via buybacks and dividend growth.
I got to ask you about another name on the list, Amazon. Now, Amazon is down right now, but news out this morning, they're going to roll out humanoid robot package deliveries. I mean, God, it's kind of scary stuff, right? But the stock has been spinning its wheels. What's going on?
I mean, I think it's just catching up. It's got the retail component that was sort of slammed by tariffs, and that's understandable. But now what you're seeing is they're shifting the focus the narrative to the technology side. I mean, they've always been there, but now they're talking about it more. I live in Waymo land, so the Vulcan robot that they utilize in their factories is already handling about 75% of items. So I think this is exciting and a great next step. If it shows up in a Waymo, it'll be the perfect storm for me.
Hey, real quick, the clock is ticking, but I want to go back to your list because Spotify is also on there, up 58% this year. It's crushing it. Do you still hold that one, or do you think about taking profits?
I think you do hold it because they are continuing to expand markets. They've updated or opened up the platform for the Joe Rogan component. The portfolio's up 14%, even with some of those names down, driven, of course, by Spotify. But this is a recession-proof name that I think you want to own for the coming years. You don't need to chase it here, but when it pulls back, definitely jump in, and if you own it, hold it.
I got less than 30 seconds. I started talking about Five Below at the top of the show, and of course, Applied Digital, which changed its business model. You've been on this year, particularly when the market was getting hammered, and you were always calm about this. I don't want to sound too corny or anything like that, but what is it about your knowledge of the market that folks watching should understand? So they're not victimized. They turn on the tube and someone's saying sell everything. They take a loss, and a month later, the stock is up 140%.
Yeah. Which infuriates me. I think one of the things to remember is the bears always sound smart, but if you look at this environment, you look at any environment, the only way to make money over time is to add in periods of stress, which is what we were doing for our clients, and I hope your viewers were as well. Buy great companies, stick with them unless you see some sort of major flaw in the underlying company. And we have exited some of those, like Intel and CVS. I hope, before there was really any deterioration.
Right.
But sometimes you just take your losses, and the opportunity cost is too great to play the deep value play. This is not a deep value market. This is a growth market, and that's what your viewers should be thinking about.
Nancy, we covered a lot. You're killing it as usual. We appreciate you. Thank you so much.
Thanks, Charles.
All righty.